So hello guys, in this video we will talk about Ironfly, and what I was thinking is, like, if you know, for the last 1 year, year to date, from August 2020 to August 2021 till last month, Nifty has moved 37%. That is, on August 2020 Nifty was around 11,200. Now it is around 17,800, above 17,800. So that's 37 to 40% up move in just 1 year, right? So how do we handle like a situation like this? Are strangles, straddles, Ironfly, ratio spread strategies, non-direction strategies like this are helping us? Now we backtested all the strategy for the last 1 year, and I'm going to tell you how this has performed over the past 1 year. Since this channel is about option selling, and as an option seller, I don't know about others. Since I am an option seller and majority of my trades are into straddles, strangles, Ironfly, or ratio spread or some other strategies. Now I was thinking, since the market is moving, you might be knowing that if you are an option seller in India, or if you are an option seller, you are going to make money only if the market is not going to move, or you are going to make money if the market is going to be range bound. What will happen if the market is trending, if the market is moving violently? And if you see, August alone market has moved more than 1300 points. In this kind of scenarios, if you deploy strategies like straddles, strangles, or ratio spread or Ironfly, how is this going to perform? Now what I did is, I did an Ironfly from August 2020 till August 2021, and we did a back testing. And what is surprising is, in spite of market moving in one direction, market being trending, market is bull, this Ironfly has given a profit, minimal profit. So that is very much surprising. You know, Ironflies are low probability, risk defined, risk defined strategies. So you don't have to worry even if the market is crashing or goes out. Ironflies are designed like that, right? You do a straddle, then you sell strangles at extreme end, or you sell strangles 200, 400 points away. You are going to construct a Ironfly. And this strategy we tested for 1 year. Now what we did, we started the strategy at the start of every month. Then we did a hedge at around 250 points, around 300 points. Yeah, 300 points we did a hedge. Straddle and 300 points hedge, both on call side and put side, and we tested this for 1 year. And surprisingly, this has given a profit. Let me show you. This is the strategy which I have tested in Hopstra. On August, market has moved around 314 point or 2.84%. So we did a straddle at 11,000 call and 11,000 put, and we bought 11,200 call option and 11,800 put option as hedge. Now what has happened is, it has given a loss of minus 1,578. I am talking about one lot. Then if you see this one, on the month of September, market has moved by 139 points or 1.23%. And we did a 11,400 straddle, and we did a hedge in 11,600 call and 11,200 put. So it has given a loss of around 1,864. So all the month, if you see, it has given a very loss. If you want to check this data, you can just pause the video and check how this Ironfly has performed. Out of 12 months, this strategy has given a profit of 5,321 in March, 1,331 in April. Then June, it has given a profit of 5,696, and July it has given a profit of 5,837. So if you see the overall total profit, it has given a profit of around 2,036 rupees for entire year. So how much is a Ironfly costing? It's costing about 50,000 or 60,000, right? So let's say it is 57, so 50,000, and you calculate how much is the profit, very less profit, right? And if you calculate the charges, brokerage, that this SEBI charges, IGST, GST, everything, this strategy will be in loss only. Now, why are we talking about these strategies? You have to see the markets have been very violent. Still, from August, it was market was around 11,200. Now it is more than 17,841. Now you have to tell me, are these strategies working? As an option seller, straddles, strangles, iron fly, or ratio spread, are these strategies working? How are you coping up with this kind of strategies, or how are you managing these strategies? Since the market is in bull run and market are moving violently, markets are trending, it is time we have to make our strategies also. We have to go into other strategies instead of taking non-neutral strategies, non-directional strategies. We have to go and focus on directional strategies. So what are directional strategies? You can do a credit spread, you can do a one-sided ratio spread. I have put a ratio spread, a video about ratio spread. If you want, I will put a link in the description, or I will put somewhere in the I button. So ratio spread can be done as a directional strategy. Let's say, for example, you are bullish and you expect the market to go on the upside. Market is at 17,800. You buy a 17,800 call option. Then you sell maybe 18,200 or 18,300 or 18,400. 1:2 ratio. You buy 1 ratio and sell 2 ratio. In case if the market closes between 17,800 and 18,200 or 300, you are going to make a good profit, right? Let's say market is closing at 18,000. At the money call option, a 17,800 call option which you have bought would be 200 points in the money. So you will make profit in that one also. Ratios, the call option which you have bought, at the same time 18,300 call option which you have sold will be expiring worthless, since it is out of the money. So you will make money here also and you will make money there also. So in case the next question comes to you is, what if market hits 18,300? No problem, you can do adjustment, and I have mentioned what is adjustment on the video. Go and check that video, or I will put link in the description below. So it is time now to change our strategies. Instead of going for non-directional strategies, we have to focus mainly on directional strategies like ratio spread or credit spread, or even if you are having guts, or if you are having if you are very confident enough, or if your risk appetite is very good, you can also do a naked call or naked put. But I am warning you, there is a strong disclaimer: don't sell naked call option, naked put option unless until you know what you are doing. You must be very much sure to do a naked call option and naked put option, right? So this is a very strong disclaimer, you have to keep that in mind. Now this is now I'll come back to the video. Now this is about iron fly without any adjustment. Now what will happen if we do the adjustment? So we will come out with another video maybe tomorrow or day after tomorrow. So this is a very long series. So we will test strangles also, straddles also, with adjustment and without adjustment for the last 1 year. So it is going to be 3 or 4 videos. I thought it will be of very much use to you. So for now I will finish here. We will meet again maybe tomorrow with the same strategy, if what had happened if we did a adjustment. So we have talked about an adjustment also, and one of our group member told that the adjustment what I was telling is called reverse hurried. I really didn't know that term. In fact, he was the person who told me, this gentleman told me that this is reverse Harvey system. So we will do the reverse Harvey adjustment, and we will see how it has performed for the last 1 year, right? So thank you for watching. Take care. Have a happy weekend. Bye.